Season's greetings, and I wish everyone a very, very happy new year and a safe and a healthy year ahead. A lot has happened in 2020, some of which was unprecedented, that really changed the way business was done in the real estate sector. The first half of the year witnessed a complete standstill of activities due to the forced lockdown, leading most pundits to believe that the already troubled sector was entering another stage of crisis. Now, while the residential sector was already challenged by liquidity issues, lagging demand, and mounting debt, the star performer, the commercial office sector, also saw a significant decline in demand in Q2 2020. Work from home, which was a forced business process continuity measure, was being touted as the new normal, and many predictions revolved around the concept being a more economical and viable option versus owning or leasing office space. But things changed rapidly in the second half of the year. As we now embark upon 2021, the market developments in the last few months have stakeholders hopeful of a stronger and more stable growth. Series of announcements made by the government and the Reserve Bank of India pumping liquidity into the economy led to remarkable resurgence of the Indian real estate market. By Q3 of 2020, demand for office occupiers and home buyers alike revived, with Q4 recording performance that far exceeded those achieved in the previous quarters of the year. Resumption of business activities and improvement in sentiments with news of the potential vaccine ensured office transaction volume for the top 8 cities grew by a massive 271% quarter on quarter in Q4 2020 and reached an impressive 115% of the pre-COVID level, that is the 2019 quarterly average. This performance underscores both the latent demand in the Indian markets and the potential impact of a timely and meaningful push by the government and by the Reserve Bank of India in a pandemic period, and because of the resilience of its key occupier groups such as the information technology sector, BFSI, and a few others that stayed on course of growth. In the residential sector, a significant amount of pent-up demand came to the market during the festive season, and as a result, sales rose a staggering 84% quarter on quarter. The three factors that pushed home sales in the second half of the year were: first, home loan interest rates were at a historic low. Second, flexible price and payment terms offered by developers. Third, a greater need for home ownership as people spend more time indoors on account of restricted mobility during the pandemic. The strongest movement in demand was seen in the Mumbai and Pune markets due to the limited period 300 basis point cut in stamp duty rates by the Maharashtra state government. We believe more stimulus measures like this are the need of the hour for other markets too to refresh the country's housing market to its true potential. We look forward to the new year with cautious optimism and heightened level of preparedness for socio-economic challenges as faced in 2020. The fundamental changes to the business environment and our experiences of the pandemic will define the way businesses and real estate markets move forward. We are hopeful that a more stable economic environment will emerge in 2021 and expect stable growth to resume pace at the earliest. Thank you.